And on Friday, the heaviest rain will end in the morning, but lots of clouds linger. There could be a few showers, temperatures mostly in the 50s. On the Money Matters Radio Network, I'm Mark Rosenthal.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
Seems everything costs more these days. Gas, groceries, and when's the last time you checked your wireless bill? Yikes. When it comes to big wireless, if you're staying, you may be overpaying. Switch to Consumer Cellular and get the same fast, reliable nationwide coverage without the big wireless bill. Plans start at just $20 a month, and that's not a short-term promo. But don't just take our word for it. Here's Jackie and Veronica, real customers.
I didn't know that I could get something for a lot less money that was actually better than who I was with before.
Anytime anybody complains about their cell phone bill, we say, you've got to check out Consumer Cellular.
Our U.S.-based experts will get you switched and saving in about 20 minutes. Just call or click to see how much you can save today. Because when it comes to big wireless, if you're staying, you may be overpaying. Call 1-888-FREEDOM or visit ConsumerCellular.com. That's 1-888-FREEDOM or ConsumerCellular.com today. Real people paid to share their opinions in this ad. Plans include $5 credit for auto pay and e-billing.
You're locked into Money Matters Radio, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month. It is titled Trusts in Your Financial Plan. Mike, when you look at the big reasons that someone might want to undertake trust planning and how that dovetails with financial planning, what are the big items that come up for a lot of people?
Yeah, for most common reasons, there's four that I think about. One, in certain states and across the country, there's an estate tax, and so there's trusts that can help you mitigate the cost of that estate tax for future generations. There's trusts that can allow you to do sorts of bloodline planning. Maybe you have minor children and you're worried about passing away young. You can have trusts that are set up to deal with that situation. You have trusts that can avoid probate. And then the fourth one is sometimes a trust that might help deal with creditor protection. Sometimes a nursing home would be one of those creditors.
When we talk about financial planning, generally we're talking about things such as budgeting or investment allocations and things like that, and making that work to get you the money when you want it. How do you view trusts as fitting into that as well?
Well, it's one of those boxes that you need to check, and it goes along with other estate planning documents like a will, like a healthcare proxy. But important for most people, especially those in New England, to at least have the conversation around trusts and whether or not it fits into their strategy.
The guide, again, is titled Trusts in Your Financial Plan, and it is available for you to request at no cost. All you have to do is call 800-393-4001. The title, again, is Trusts in Your Financial Plan, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The Copley Square Farmers Market has returned to its original home in the beautifully renovated plaza. Open Tuesdays and Fridays. Shop for locally grown fresh fruits and vegetables, sustainably raised meats and seafood, regional cheeses and handmade items, while connecting with neighbors and in one of Boston's most cherished public spaces. Visit the Copley Square Farmers Market and support farmers and local makers. Sponsored by Mass Farmers Markets, a nonprofit working to strengthen farmers across Massachusetts. Find markets near you at massfarmersmarkets.org.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you here, and pretty light week as far as economic data. There's just not a ton out there, but still, obviously you got some movement in some different markets that we'll be talking about. We got a tax bill that's trying to get through Congress, and so that is kind of where we're going to start today, is the intersection of taxes and bonds, and the question that is out there, which is, hey, look, bond yields have started to move back up over the last couple of weeks, and you've got this tax bill that is making its way through Congress now. I say this as if, the tax bill has legs and it's just strolling around like, hey, Congress person, how you doing? Senator, good to see you. I'm a tax bill. Nice to meet you. Hope I pass. Obviously, that's not quite how it happens, but I think the obvious question that's out there is, can you draw a line between this tax bill and what's going on in bonds? And specifically, a couple times in the past year or so, we've seen these upward moves in bond yields, and the answer that has been given to us a couple times is, well, it's because the deficit's too big and that's why bond yields are going up. To which I always respond after bond yields have subsequently gone back down, gee, did the deficit picture get better? Like, did the deficit picture improve? Is that what we're seeing here? And the answer is no, it didn't. And so I think that you can put to bed, at least for the last couple of years, the idea that, hey, the level of debt outstanding has been a major driver of bond yields. I just don't think it has. I think it's been far more growth and inflation that have been the drivers still. The question on this is, here we have a concrete event that is that has the potential to reshape what future deficits look like. And in that case, is it different, or is this just people, again, looking for an explanation as to why bond yields are moving, and there's no there when it comes to the deficit?
Yeah, probably a little bit of both. Deficits do matter for rates. They're just not the only thing that matters. Interest rates are just the compensation for deferring consumption. You sacrifice today, you give your money to someone that needs it. It could be a bank, it could be the government, or indirectly through, say, a mutual fund. So interest rates are determined, and that's plural, so there are lots of different ones, but they all have one thing in common. They're determined by the supply and demand for loanable funds. So to the extent that government deficits, just the difference between what government takes in and what it spends, to the extent that that goes up, that will, all else equal, put upward pressure on interest rates. We've been really lucky, though. For the past 20 years, especially 25 years now, I guess, roughly since 9/11, when the wheels really fell off our fiscal situation, and we've never fully reattached them. International investors in particular have been willing to buy our Treasury debt, and that's helped keep rates low, not just here, but all over in developed economies all over the world. The question is, I guess, has our luck run out?
And I don't think that you know the answer to that until you get past it, because
that's right.
As I've said over and over and over and over and over and over and over, if you have tried to make a career in the investment world over the last 50 years saying, gee, the deficit's too high, we gotta, this is a real problem, and then you made an investment strategy based off of that, it probably would not have worked out very well for you, because your strategy would have been, well, I got to get short bonds because bond yields are going to go up. And basically from 1982 through 2022, they didn't. Bond yields were on a 40-year march down. And you also might have said, well, this is going to crowd out investment, so I want to get light on equities. I don't want to own much there because equity performance is going to be bad. And in fact, it wasn't. So, like, the thesis of, hey, there's too much debt out there and this is a problem has not really been viable for the last 40 years. The question of, is it different this time, I think is a worthy one to at least ask. I don't have the answer for it, but I think it's worthy of asking for two reasons. They're kind of, intertwined. The first is, the aggregate level of debt that's outstanding has changed dramatically in the last 10 years in particular, to the upside. And annual deficits, even with unemployment at some of the lowest rates that we've ever seen, even with unemployment at 4.2%, you're running annual deficits north of 6%, potentially challenging 7 or 8% in any kind of baseline scenario over the next, 5 to 7 years. And that is a fundamentally different proposition than we have ever seen in the United States out of either wartime or in the midst of a recession. We have not run annual deficits that high with low unemployment ever.
Yeah, I think that's the key point. It's different. The 1980s and 1990s did witness falling interest rates, say, use the 10-year as the 10-year U.S. Treasury as a reference point. The 1980s, though, in the early 80s, the economy first swooned and then recovered. And during that recovery, though, nominal interest rates were falling along with inflation. And nominal just means you include inflation. But most people aren't interested in nominal stuff because you don't eat nominal. You eat real. You're interested in your standard of living, and that's measured by real or after inflation concepts, thus the nominal real distinction. Real interest rates then shot up in the very early, in the mid 1980s up till 1985 because the economy was expanding vigorously and the demand for loanable funds went up and the budget deficit was exploding. And not coincidentally, because it's related, the trade deficit was also exploding larger. Then real interest rates came down for various reasons in the late 1980s, and they stayed relatively placid throughout the 1990s. Most researchers think that's because we got our fiscal house in order in the 1990s. So a great stroke of luck over the last 25 years that interest rates have not exploded higher, coincident with this growing overall debt to GDP, gross domestic product, which is one way to measure debt burden. Most researchers don't think the current fiscal path, that is to say projected deficits, which will explode under this tax bill, which is astonishing given that the economy's experiencing a relatively robust expansion and doesn't need stimulus. Most researchers don't think it's sustainable.
So it kind of leads to the question. It does not beg the question. It raises the question. Okay, when is it going to actually not be sustainable? Like, when will that actually show up? Because it's kind of binary. You know, it's kind of binary in that, hey, this either is a problem or it's not. It's not just going to be business as usual. What does it mean when it shows up, and when does it actually show up as that problem? And so I think that's the question that I think is worth raising based on what the bond market is saying right now is, hey, is the passage of a tax bill that has the potential to dramatically increase deficits over the next decade, is that going to be the bridge too far?
Right.
Maybe, but let's also keep the idea out there that maybe it's not, because that's been how it's worked. I'm not saying that it will or won't. I'm just saying acknowledge both possibilities as being there, and we'll see if this plays out, because when it does happen, whether it's in a week, a month, a year, a decade, or 100 years, when you finally see the size of that deficit become an issue, you're going to know.
Right.
It's not just going to happen and be like, oh, like it's business as usual. Like, you will know.
Yeah, you use the phrase, this time is different. Two researchers, Reinhardt and Rogoff, I'm just using their last names, wrote a book, came out in 2009, I think.
Yeah.
But they published research that underpinned it much earlier. Their red line was 100% debt to GDP, meaning the size of debt held by the public, treasury debt equals our GDP. We're now about at that red line. They didn't find, they looked at a large cross section over time. I'm mixing terms a little bit there to come to that conclusion that 100% debt to GDP seems to be the red line. At that point, growth slows and interest rates go up. Obviously, that's not a law. That's just a regularity that they observe. Right. That's just a regularity that they observed. At some point, it will matter. We're crossing a potentially dangerous line. The question is, what happens when we get on the other side of it?
What's the sample? Do you happen to know the sample size on that? Just because I'm just trying to think back historically, like how many countries are there that have gotten into that shape where we have like reliable economic data for?
No, it's not large for reasons that you talk about. You need to be a developed market economy because only they have the record keeping to provide. So there's always a bias in.
Oftentimes they're only the ones that can get to that level of debt also, because no one lends to you if you're an emerging economy and past a certain point.
Look at Japan. They're at 200% debt to GDP. Their circumstances are different. So the red line is different there.
Sure.
There is one. We just don't know where it is. So I don't. Small sample.
In conclusion, nobody knows anything.
No, I wouldn't go that far.
Nobody knows everything.
Nobody knows everything.
Yeah. Yep. Welcome to the Financial Exchange, where nobody knows everything. We're going to take a quick break. When we come back, we'll talk about. Should we do Target? Yeah, we got some earnings. Let's do Target and Lowe's after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699 or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Trust can play a key role in your financial strategy, and understanding the different kinds and their purpose may help you make the right decisions for your overall plan. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Trusts are utilized for a variety of reasons, but the most basic use is to make settling an estate easier. Trusts have the ability to bypass probate, which can save you significant time and money while allowing your assets to be distributed directly to your beneficiaries. Our new guide this month is called Trusts in Your Financial Plan, and you can get it by calling 800-393-4001. Learn about trusts and their possible benefits to your financial strategy by requesting your free guide today. That number again is 800-393-4001, or request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and a vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations and more information, go to visitusvi.com. That's visitusvi.com.
Couple different retailers reporting earnings this morning. Let's start first with Target. Target shares are down 5% because I got to tell you, and I didn't come to this conclusion too lightly. I came to it a little bit lightly, but not too lightly. I'm starting to get the feeling about Target that we got 10 to 15 years ago with Macy's and 5 or 6 years ago with Kohl's. And I guess what I'm getting at here, so Target's quarter was not particularly good. In fact, it was bad. Their comparable sales were down 3.8%. That was worse than expected. They expect net sales to decline by a low single-digit number this year. And they basically said, look, things are not going particularly well. And there were a few mentions of, tariffs and this and that, but I got to tell you, there are plenty of other retailers that have been reporting earnings, and they have not shown these kinds of numbers. So I think Target has a problem here, and it could be any one of a number of things that I think can best just be summed up as they're not executing particularly well. It could be their product mix is not very good anymore. I don't know. I'm not a shopper at any of these stores. I don't do it. It's not me, so I don't know, any of this for certain. They've got, again, maybe it's a mix of goods problem. Maybe it is a problem with how they are marketing and not being able to reach the customers they used to. Maybe it's something where they're just not, they're just not operating as efficiently as they can. I don't know what it is, but something stinks there. And again, it's not necessarily that the company's just going to fall apart and be nothing, but could you see it become one of these Macy's situations where, okay, their sales are $100 billion this year, and 20 years from now, their sales are still $100 billion, and they're selling, stores off and it's kind of got that vibe to it at this point.
Seems like a lot of unforced errors, too. They're wading into political debates, coming in hot on one side, backing off, getting boycotted by both ends of
everyone's boycotting them.
By both ends of the spectrum.
They're being boycotted by everyone.
Which is great for me because I walk in, get what I want, and walk out. There's never a line.
Well, even though they're not really being boycotted by everyone because they're still doing $100 billion in sales. But it's
on the margin, though.
Yes,
it matters,
that marginal
right?
person.
The direction of... So it seems like there's something wrong at the very top. Maybe it's bad judgment, bad culture, bad management culture. I don't know. How much pain will shareholders tolerate before they demand a cleaning of the house and an entirely new direction from the top down? I don't know.
It's just a real question, as to where they go from here. I don't know what the answer is, because ultimately you've got a million different places that you can buy stuff right now. Why are you going to pick them? Why, what is the reason to pick them? With Walmart, I can explain it, and it's right in their tagline. Always low prices, always. You walk into Walmart, you feel like you're getting a value. You walk into... where else do you buy stuff? Amazon. You know why you buy stuff on Amazon? It's there tomorrow. That's why you buy stuff on Amazon. They got everything there, and it's there tomorrow. What are other big stuff retailers?
Stuff retailers?
Yeah, who are the other big stuff retailers out there?
Do you want to put any of the dollar store retailers there?
We're going to talk about
one
of them.
Toss them on the list. Why do you buy stuff there? It's even cheaper than Walmart.
I'll say this. We go to Target 2 to 3 times a month.
Yeah.
Just out of necessity and proximity. There's not a Walmart close to us.
Yeah.
But it's more of a convenience experience than it is a discount experience.
Right.
Yeah. We don't seek out Target because of their discounts.
It's because it's there.
Correct.
Yeah. So what's the selling point for them? On the other hand, Lowe's, the home improvement retailer, they came out with earnings as well, and their stock is down about 1.6%, but they had, pretty decent numbers for the quarter. They still have some concerns out there as far as how tariffs could impact them, but overall, it's something where they say, yeah, we're expecting same-store sales to be up, anywhere from flat to up 1% this year, and given, where the American consumer is, and that's not all bad. That's not a bad place to be. So I think that the home improvement stores, Home Depot reported yesterday, they're kind of telling you a story which is the same as what we're hearing from the rest of the housing market, which is, the housing market's kind of slow, but we're finding ways to muddle through, and we'll get there, and it's not going to be like this forever. That's what they're telling us right now. With housing, it can obviously change in an instant. Interest rates go up 0.5%, things look pretty bad. They go down 0.5%. Hey, look, a lot of people are buying, stuff at Lowe's and Home Depot again. But to this point, it's the same stories we're hearing from, existing home sales and stuff like that, which is, yeah, it's kind of sluggish out there. We're finding ways to make the sales, but the numbers, they're going to be what they're going to be, and we'll live to fight another day. That's kind of what you're hearing from them. No execution problems. It's just they're operating in a slow segment of the market. Whereas, Target is going up against Walmart, who just keeps, hitting singles and doubles off the wall all day, every day. Let's take a quick break. When we come back, we got Wall Street Watch, and then we're joined by Todd Lutsky after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts in Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse, when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutsky and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in negative territory as Wall Street monitors tax bill developments out of Washington and also react to more retailer earnings this morning from Target and Lowe's. Right now, the Dow is down by about 1%. S&P 500 is down by 0.6%, and the NASDAQ down by 1/3%. Russell 2000 is actually up by 0.9% this morning. 10-year Treasury yield up 5 basis points and is now at 4.53%. And crude oil up 0.2%, trading at $62.42 a barrel. Target down by about 5% after the retail giant came up short on first quarter revenue estimates and cut its full year sales outlook. Executives blame tariff uncertainty, weaker discretionary spending, and backlash to the company's rollback of diversity programs. Target also noted it aims to keep price increases as small as possible. As for Lowe's, that stock down by 1%. After the home improvement retailer reaffirmed its full-year forecast, putting the company on track for year-over-year sales growth. Lowe's first quarter revenue did, however, come up just short of expectations. Meanwhile, shares in Palo Alto Networks down by 6% after the cybersecurity company's sales outlook missed expectations. The company did still beat on earnings and revenue expectations for the quarter. Elsewhere, VF posted lower than expected quarterly revenue as the owner of Vans Sneakers and the North Face said it accelerated production and shipments into the U.S. during the 90-day tariff pause. That stock down by 10%. Toll Brothers backed its annual outlook despite softer demand and a fall in profit in the previous quarter. That stock is up by 0.75%, and United Health down by over 5%. After HSBC downgraded the health insurance giant, saying valuations are still elevated despite a recent rout. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
Todd Lutsky joins us now for Ask Todd. We got phone lines open at 888-205-2263 because that's the number to call to ask Todd your estate planning questions. Again, that number is 888-205-2263, and the point of this segment is for you to ask your questions live on air about your estate plan, and Todd will not send you a bill after doing so. Mr. Lutsky, thanks for joining us.
Thank you. Always a pleasure.
Again, we got phone lines open at 888-205-2263. Get calling because we usually only get through 2 or 3. Last week we did a record. I think we got 4, which ties the record for the most calls we've ever gotten through. But otherwise, we're usually a 2 to 3 call per show deal. Again, 888-205-2263. Todd, is there any size estate that is too small to benefit from doing trust work?
I mean, the way I look at estate planning is a couple of things need to be accomplished. One, obviously probate's an issue. Is it a biggest issue? No, you probably don't have to plan just to avoid probate if you don't want to. Taxes, always got to talk about taxes. Taxes may be an issue, but obviously if your estate's small, Chuck, as you indicated, maybe taxes isn't a huge deal. But you can't ignore, family, because a lot of what you're doing, whatever the size of your estate, how you get it to your family or when they get it or why they get it might be important to you. And if it is, then that might be a reason to plan. And let me answer that by saying, what if you're younger, right? And you have minor children, you might not have a taxable estate yet, right? You might not be over the Massachusetts $2 million exemption, so you don't need a trust to avoid the tax. Hopefully you're going to grow if your asset, if you're younger and you're just starting out and your assets are going to grow. But if you pass away, unexpectedly at a young age and you have young children, whatever you do have, even if it's just your home, you want to make sure that asset doesn't get controlled by somebody like a guardian. You want it to be controlled by a trust. So I might want a trust for my family. So even if I'm older and I don't have a taxable situation, but I have some assets that I want to leave to a family member in a certain way, do it. If you don't have a taxable event, but you want to protect assets from the nursing home, so I could have a smaller estate under $1 million, but I want to protect my house from the nursing home, then do it. So I guess at the end of the day, Chuck, I'm probably at a point where I'm saying a lot of it is family driven, but I also say it does have to make economic sense. I get it. If I can tell you a way that's less expensive than spending the full amount to do an estate plan, I'll tell you. Right? So if it doesn't make economic sense to spend the money now to provide the family benefit and an economic benefit to the family, well, then I say don't do it. And I will tell you, like, if I just want to avoid probate and give it all to my kids, then maybe just name designated beneficiaries on all your accounts and be done with it. You might have a little probate here and there, but they'll get it.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. Again, we call the segment Ask Todd because it's your chance to ask Todd your estate planning questions. Still got a little bit of room on the phone lines at 888-205-2263. That is the number to call to ask Todd your questions live on air right now. Again, 888-205-2263. We're going to take a quick break here, but when we come back, it's going to be right to your questions with Todd Lutsky. That phone number, one more time, is 888-205-2263. Quick break, then your questions with Todd.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-390 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Celebrate the arrival of summer with the best of what's local and fresh. Farmers markets across Massachusetts are packed with vibrant produce, pasture-raised meats, local seafood, small batch cheeses, and artisan-made goods. From ripe strawberries to artisan finds, markets are the soul of our neighborhoods. Stop by your community market and support farmers and local makers. Sponsored by Mass Farmers Markets, helping grow farmers markets across the state. Find your local market at massfarmersmarkets.org.
Todd Lutsky answers your questions about estate and elder life planning every Wednesday at 10:30, right here on the Financial Exchange Radio Network.
All right, let's get right to your questions with Todd Lutsky. First up, we got Patrick in Ludlow. Patrick, what's your question for Todd?
Hi. I'm a little curious as far as regards if there's any new loopholes for capital gains. I've seen rumors about this administration possibly trying to get rid of that at some point. But right now, I have a rental property, which my wife and I have decided to get rid of it. Mm-hmm. And I know we're going to have to pay capital gains on it. Is there any suggestions as far as any new loopholes or anything like that where we could avoid that?
Do you want to buy another property or no?
Not at this moment, no. And I know that there's, what is it? You have to
1031 exchange.
Exactly.
Where you could delay, and never pay the tax if you die owning whatever property you die owning. Well, so if that's out, there's still 1031 exchanges, and they're called, you don't have to actually buy real estate, but you can buy these Delaware trusts or whatever they are. There's some sort of an investment. And again, I don't want to step out of my lane here, but check with your investment advisor, and they might have these Delaware trust investments that you can buy, and they hold real estate, and they qualify for a 1031 exchange without buying real estate. You're buying an investment that qualifies. So that might be the way to go for you. That way you don't have to have the property, and you can delay the taxes or whatever, but learn more about how that works. And the only other issue I can think of is, no, there isn't. I mean, as far as I know, capital gains are still there, and they're here to stay. But I don't know that that's even in the new tax bill, unless they get rid of the entire IRS, which is possible. Who knows? So hopefully that helped a little. It gives you some ideas on what to do, folks. Speaking of ideas on what to do, many people don't do their estate planning. That's a pothole. right? To me, I got a new guide here, Potholes to Avoid. We've been talking about it all month. It basically, so many people, like someone dies and they forget that there's taxes that need to be filed on these trusts that existed. Things change when someone dies. The type of tax return for the trust might change. And please don't make the mistake of taking everything out of one trust and putting it in the surviving spouse's trust. These are potholes that exist for people that have done their planning, or maybe they're changing residency. What do you do? Folks, there's many things to think about. If you've done your planning, there could still be potholes. Get the guide. If you haven't done your planning, there's a whole list of things in here that will help you to avoid when you're starting out and doing your planning. So get the guide, Potholes to Avoid, 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Got another one for you here. Let's go to David on the Cape. David, you are on with Todd Lutsky.
Hi, good morning, Todd. My mother has irrevocable Medicaid trust. I'm the trustee. She asked me to give my brother $20,000, so that's over the $18,000 limit. Does he or I have to file a gift tax form with the IRS?
So is this money that you plan on gifting to the brother coming from the trust account?
It's coming from the trust. He's a lifetime beneficiary named on the trust.
Well, I think, the trust probably says income to mom, right? Principal mom cannot have, okay? And principal, however, maybe in your discretion as trustee, David, can make distributions out to kids of all generations. That's kind of how our trusts are drafted. So I'm going to assume this Medicaid trust has similar language in it, which is, first of all, for everybody listening, that's why money, $20,000, can come out to the brother here. That's a child of mom. So let me ask you this. How much is the amount of money in the trust potentially able to generate more than $20,000 a year in interest and dividends?
Yes.
Okay. How much do you think it generates in interest and dividends per year?
I think last year it filed taxes about $50,000.
So arguably, if mom doesn't need all $50,000, you could make a distribution of $20,000 to mom. That's not a taxable event. That's not a gift, right? And that's technically income generated by the trust. And so now mom got the income. If the trust provides, mom's entitled to the income. So now mom's got the income. She's got the $20,000. She can turn around and make a gift to her son. Yes, she technically would need to file a gift tax return if it goes over 19. So my advice might be, you know what? Take the 19 and let's just go on from there. No need to file a gift tax return for the 1K. That might be easier. So, I mean, that's probably the answer. If not, then the trust makes the gift out to the brother. Again, I'd just stick with 19 for $1,000. I just wouldn't worry about it. I would give the brother the 19. That's technically a gift from mom, non-reportable, non-taxable, and then the brother has it and you're all set. So that would probably be the two options I would do. Otherwise, yes, if you do go over the $19,000 per year per person number, you do have to file a gift tax return, but there won't be any gift taxes due because whether it's you or your brother or the mother, we have a $13.9 million gift tax exemption once in a lifetime. So unless we exceed that, we don't pay a tax. So if you gave 20, 19 is a freebie, 1 comes off of the 13.9 million.
Todd, I got another one here for you. Let us go to Kevin in the car. Kevin, what's your question for Todd Lutsky?
Hi, guys. Good morning. Hey, Todd, I had a question. So I'm 63. I'm looking at retiring probably in 2 to 3 years. Mm-hmm. I have a 401k. My wife has a retirement. We own our house. But that's about it. Mm-hmm. We checked out a couple of years ago. We were thinking of maybe doing some kind of trust. Mm-hmm. And kind of got talked out of it.
Really?
Well, I shouldn't say that. Some people said we should do it. Other people said maybe it's too early to do it. have right now. And I'm just curious, is there something else we should be looking into as far as maybe doing the trust right now and spending the money to do it?
So let me ask you this. You've got a house. How much is that worth?
Well, $1.2 million.
So that's a big asset. And then other than 401k type money, do you have other money, cash, investments, and how much?
No.
No, it's all 401k type money. A little bit of money in the bank maybe, but primarily a house and 401k type money. So how much are we looking at as a total value of your estate, you and your wife combined?
It's probably somewhere between 2.5 and 3 million.
Perfect. And again, 1.2 of it is the house, which is a big number. So you're pushing close to half of your estate is a house. So you should do planning, which would involve a trust. The kind of trust still remains to be determined. But if you did a revocable trust, you're at least going to avoid probate. And with a $3.5 million estate, it will serve to not just reduce, but eliminate your Massachusetts estate tax, okay? Because we can shelter up to $4 million on the first death if you're married and you plan, okay? So that's what the trust would do. So it will avoid probate, keep you in control, eliminate the taxes, and provide how these assets will get to your family, right? So there might be, kids aren't good with money. I'm worried about future divorces of the children. So there's a lot that can happen after you die that a trust can also provide for. So I think that you have enough assets to certainly do planning from a tax perspective and a probate perspective. And do you have children? I didn't ask you about that.
I do, yeah. They're not children anymore. They're 32 and 28.
Do you have grandkids?
Not yet.
Okay.
No.
See, but planning for all of that might be on your plate as well, and that's where the trust lives on after you die, and we can take care of them in whatever manner you want. So that's step one. The only thing that I didn't describe that may or may not be a concern of yours, again, 63 and over or 60 and over, I'm going to ask the question, nursing homes. Do I want to, say 5 years from now, have certain assets, my home and any other assets I can put in the trust, protected from the cost of nursing home care? If I do, then we would address how an irrevocable trust works, which would ultimately keep you in control of your assets, 98%, and do everything the revocable trust does, but also provide, after 5 years, protection from the cost of long-term care. So I think you're on the right track now. I think you just need to sit down and figure out which type of trust is right for you, but planning certainly would be good for you.
Mr. Lutsky, thank you for joining us today.
Thanks so much.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Still a bunch to come as we head towards hour 2 of the show. We'll be talking a little bit about the housing market. Also, what's going on with search engines. How is Google trying to adapt to what's going on with AI and a significant threat to their business? Also, we'll talk a little bit about what is going on with the App Store now that Apple is, being forced to change some policies on that front. And we got a redesign of a major U.S. vehicle that one of the top sellers in the U.S. will tell you which one is being redesigned and what they are doing in the next version. All that and more coming up in hour 2 in just a bit.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit GoRedForWomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Trusts in Your Financial Plan. Mike, a lot of times when we talk about financial planning, it's with the idea of having your money available to you to use when you need to use it. How do trusts work to kind of keep that idea going, not just for yourself, but also for the next generation as well?
Sure, and it doesn't always need to be the next generation, because how many times have you heard somebody say, hey, look, I raised my kids, they're in a good spot, I want the less check I write to bounce. I'm spending this money. But, there can be situations where trust can benefit even a married couple in the event of a lawsuit or a nursing home that's unexpected, especially if there's a big age gap. That can be critical. But for next generation planning, it gets much more common, and especially in the New England area where most states have an estate tax, there's a lot that can be done from a multi-generational planning perspective to, if not eliminate those taxes, at least mitigate them to a large degree. I mean, you think about here in New England, the value of your primary residence, which you sell, it might not be subject to capital gains tax, but if you die, is most certainly subject to estate taxes. There's a lot that can be done in the way of trust planning.
Our guide this month is titled Trusts in Your Financial Plan, and you can request it by calling 800-393-4001. Again, that number is 800-393-4001, and the guide this month is titled Trusts in Your Financial Plan and details a number of ideas about how you can fit trusts into your financial plan.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Hour 2 here on the Financial Exchange. It is Chuck, Mark, and Tucker with you, and we got markets kind of mixed today. The Dow is off almost 1%, 365 points. The S&P is down 20 points, about 1/3%, but the NASDAQ up just a touch, about 13 basis points, 28 points right now. It is up, being largely driven by Google or Alphabet or whatever the heck they're called these days. They're up almost 4% on the back of some new AI features that were announced yesterday. I don't know if being able to make photorealistic movies using a very basic prompt is something that is going to be good for humanity. In fact, I suspect it's going to be generally awful for us, but people like it today for the stock, and so the stock is up. Have either of you guys seen like what they announced yesterday?
It was like some sort of AI search thing. I don't know.
So the big one that I saw, it's something called, I don't know if it's pronounced VEO or VEO, but VEO, and it is a video-generating AI model that can create video and audio that goes with it with very basic prompts. And some of the stuff that I've then seen created as a result of it is to the point where in somewhere, in the range of, 8 to 10 minutes from now, adults are going to, start viewing this stuff everywhere, and we're not going to know what's real and what isn't, and so we're basically going to have to turn the internet off. That's kind of where this is going. I honestly don't know why this is useful to anyone. I realize that we need to talk more about what markets are doing, but in what world is it a good thing to allow to build technology that allows people to make photorealistic video just from text that you're writing? Like what are we doing here? Like that all the geniuses that are out there, and they're like, yeah, what could go wrong with this? You realize they're going to they're going to end up killing their own company because no one's going to trust the internet.
I mean, you question everything now. You see on social media like twice.
I mean, like, I see Tucker standing in front of me. I'm not even sure if he's real.
Yeah, I'm at home on the couch, really.
Right?
This isn't me.
So, I don't know. Like, this really seems like a big, stupid problem, quite honestly. Like, I'm kind of...
Yeah, what problem does it solve?
I'm kind of upset about this, to be honest. And it's just because it's like, what's the point?
Mm-hmm.
Like, what do you... Oh, well, we can charge $250 a month. So someone's going to pay $250 a month to make all the photorealistic videos they want, and you don't see anything that could possibly go wrong with this? And just as an example of what can go wrong with this, someone who I follow through various different social media platforms already... I'm trying to find the exact prompt that they used, but like you know, all of the things are like, oh well, you can't use someone's real name and this and that, and all you can do is like just change the words around a little bit, and you can basically get there. But somebody already made a fake video of a British news anchor saying that J.K. Rowling's yacht was sunk with her on board when it was attacked by a herd of orcas. This obviously did not happen. But the way they got around this was just by, instead of writing like J.K. Rowling, they spelled like Jake, Hey, Rowling, and like that was enough to get past the AI filters. So again, we're going to have, fake news anchors that are saying that like, Chuck Zodda was beaten by a group of angry toenails yesterday and... he's in critical condition and is currently receiving plasma from the sun in order to help with his recovery. I don't know. I feel like we just live in the stupidest timeline.
It's getting dumber.
It's getting dumber, and honestly, at some point, we just need to go find the off switch for the internet and use it.
Or reset.
The reset button we tried.
Did we?
No, but we should.
Just attempt it.
Like, someone just needs to turn the internet off and start over.
Unplug it, plug it back in?
Yeah.
Reboot it?
Yep, reboot it, blow on it a little bit, Maybe the cartridge is just a little dirty.
Like a Nintendo?
Exactly. And then plug it back in and see if it works. Because this internet, I gotta say, it's kind of starting to suck.
Kind of.
There's some redeeming aspects to it still. There are some redeeming aspects to it, but man, when we're just like, hey, for $250 a month, you can generate all the photorealistic videos you want and just have all kinds of, stuff that gullible people are going to believe. I don't know, man. Because here's the thing. Isn't like the last bastion of what we believe to be truth, well, it was caught on video? Not anymore.
Right.
Not any, like, how can you prove anything?
The old-fashioned way, I guess, evidence and witnesses.
Which is why I say, like, we're going to have to just turn the whole thing off. The whole internet, we got to turn it off.
Yeah, I mean, you see verification now of social media accounts, whether it's Instagram or X or whatever. You know, you see that check mark there. You're going to get to the point now where somebody's going to have to go through the video and have some sort of watermark there and be like verified real.
Yeah, it's going to be really dodgy. I don't know how we get through this with the internet continuing to exist, because they're going to kill it if they keep doing this stuff. And people say, well, like someone else could like come up with it. I don't know. It took Google, with all the money they have, like 3 years to come up with this. Pretty good idea that like Jim Smith in his garage is not going to be able to do it faster than them, because he hasn't.
Somebody said, text in into the show at 617-362-1385. I agree 100%. Ever since AI came out, I don't believe half the videos.
And that person's probably a bot that texted in too. Even the AI doesn't trust itself.
AI listeners we have.
Even the AI listeners we have don't trust themselves. That's where we are. Continuing through markets, the 10-year Treasury is down 4.8 basis points to 4.529%. We have crude oil, West Texas Intermediate, down 8 cents a barrel today to 61.95, so not a ton of movement on that front. And we've got gold up 23.20 an ounce to 33.07 and 80 cents. Also, platinum making some waves the last couple days, up almost 5% yesterday and nearly 3% today on news of something related to platinum. I don't follow it, so I don't know why. I just saw it moving and said, oh, like, gee, that's kind of interesting. So let's take a quick break here. When we come back, no more AI talk. Instead, we're talking about something real. Specifically, it's got real in the name and estate in the name. That's right, we're talking real estate when we come back.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts in Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
With Memorial Day coming, now's a great time to register for the DAV 5K taking place on Saturday, November 8th at Fort Independence on Castle Island. The race has sold out each of the past 4 years, and slots are continuing to fill up quickly, so don't delay. Visit dav5k.boston today and reserve your spot or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th for this year's DAV 5K. Sign up now at dav5k.boston. Today, time for trivia here on the Financial Exchange, by the way, and today is Al Franken's 74th birthday. Franken was one of the original writers for Saturday Night Live, but left the show in 1980 when he wasn't selected to succeed Lorne Michaels as executive producer. Franken returned to SNL in 1985 and stayed on until 95 when he resigned after not receiving the vacant Weekend Update position. So, trivia question today. Who became the Weekend Update anchor instead of Al Franken in 1995? Once again, who became the Weekend Update anchor instead of Al Franken back in 1995? Be the fourth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Did you guys see that the kangaroo got loose again in Colorado?
What?
Someone in Durango, Colorado owns a pet kangaroo. It got loose last fall. It was loose again early this week, and police had to go and catch it. They literally, this police officer had to go and basically hug this kangaroo after chasing it through the streets to catch it and bring it back to its owner.
That's going to be tough to catch. Thing's throwing haymakers nonstop, probably.
It actually, I watched the video. Again, this is assuming that it's real and not a creation of whatever the internet's doing these days. But, they caught this kangaroo. He basically, cornered it in, in an alleyway. And it just kind of stopped, and he just kind of gently leaned in and hugged it and picked it up then. It was kind of touching, actually.
Does not work with other animals.
No.
Bears.
You wouldn't. I mean, look.
Wolverines.
I figured, the thing would just start, jumping and kicking and throwing roundhouses.
All he wanted was a hug.
But it turned out he just wanted a hug.
You're allowed to own a kangaroo?
I mean, here's the thing. I figure you have to be at least in Colorado because otherwise the first time it got loose, they probably wouldn't have given it back.
It's got to be some sort of exotic pet license you have to get or something.
I would imagine. I mean, here's the thing. What do you do with it? What's the upside of owning a kangaroo?
I don't know.
Like, what's the best case scenario that happens? I don't think they are particularly cuddly. They can't help you with work.
So this kangaroo is 2 years old. By age 4 or 5, kangaroos can grow taller than most men and weigh 200 pounds.
No upside. No upside.
Seems like a hassle.
Thing's going to be knocking, things off the wall and everything. Do you use a litter box? Do you walk it?
A litter box.
Do you potty train the thing? Like, what do you do? I don't know. This brings us to our segment about why home sellers are dropping their prices. Too many kangaroos. No, so really we got a piece from Barron's. It's titled Home Sellers Are Dropping Prices, but Buyers Aren't Budging. What could change that? And really it's kind of a couple things that could in either direction. The first is, hey, if rates move up further, you're going to have, potential buyers budging even less. They're going to be digging in their heels saying, no, I can't afford this. This lays out the case, though, that, hey, if there is some kind of economic slowdown, rates could come down into the low 6s, maybe even touch the high 5s. Could that be good for the housing market? And the answer is in some areas, but generally when you have a recession, it also saps demand for things like housing. And so it's not like you get people just jumping up and down to buy a house when they're nervous about losing their job.
Yeah, I think when you're looking at any market, whether it's real estate or cars, you name it, you need to think about both supply and demand. Over the past several years, home prices are up since roughly 2020, up a little over 50%. Inflation is up about 25% over the same period, so in real terms, up about 25%. Outside of the housing bubble of the early 2000s, that growth rate is unprecedented. Granted, I'm only looking back to the mid-1980s, which is when the Case-Shiller Index, which is what I'm looking at here, starts. So growth in prices has been extraordinary. Has it been supply or demand or both? We're very quick to blame supply or lack thereof. But I'm going to argue that it could be a demand problem, too. It could be an excess demand problem. Population is barely budged in Massachusetts, at least. Go ahead.
No, this is actually really interesting. Keep going.
Well, this is not really my insight. Researchers frequently struggle with looking at various price quantity pairs. If you put these in a little graph and think about what supply and demand, I drew them in different directions with my hand.
It's fine.
But anyway, nobody's watching anyway. Sorry, Ben. If you think about what supply and demand look like, it's very hard to tease out from a bunch of price quantity points a supply and a demand curve. You don't really know which is moving. This is a classic problem in economics that goes back 100 years. There are ways to solve it, but those ways are challenging and complicated. So for all the talk about lack of supply, there's a chance that this is actually an excess demand, not a supply problem. And to your point, what happens during a recession? Demand shifts. I'm going to say to the left. That's a little technical, but you know what I mean. Demand shifts to the left. It falls. Supply,
demand goes down.
Demand goes down. Thank you.
Yeah.
Is the human way to say that. Demand goes down. Supply probably goes up because people are losing their jobs, unfortunately.
Right.
This is not conducive
Forced
to
sellers.
Yeah, right.
Yeah.
This is not conducive to home prices going up or even sales going up. So be careful what you wish for if you're hoping for an increase in supply or a reduction in demand. I don't think either one of those things are consistent with the economic, that a healthy housing market is consistent with the economic environment required to better balance those two forces.
The other piece that I think is interesting just to watch in terms of where home prices go, and this is, I often kind of poo-poo demographic trends as something that you need to really pay too much attention to because most of the time on like most people's timelines for what they're looking at in markets, it just doesn't move quickly enough for it to matter. But I do think there's something interesting when it comes to baby boomers getting older and what it means for the inventory of homes coming on the market and their children's ability and or desire to own those homes into the future. And what I mean by that is, there's some homes that I don't think the next generation is necessarily going to want to own. As an example, sad situation, you look at West Virginia and young people have been fleeing that state for years. It's a huge problem. You just don't have enough people staying in West Virginia to keep the economy viable in a lot of those small towns. If Jim and Jane Smith pass away, are their kids going to want to keep the family home in West Virginia? Real question. You can substitute West Virginia for a lot of rural towns throughout the country, but I use that just as an example because it's one we're really familiar with. So in that case, you might say, look, there's no desire to. Great, there's this inventory on the market, but who's going to buy it, and how much do those prices continue to slide then? The other one is, hey, mom and dad passed away, and they've got this great house on the Cape. But we can't afford it because we don't make enough to be able to continue to live there. We need to sell that. Are there enough people that are going to want to buy to keep those prices up? In certain really desirable areas, the answer still will be yes. In others, the answer is going to be, well, we'll have to see. Let's take a quick break. When we come back, we got trivia. The answer to it after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school. Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
A solid financial plan has many layers, and trusts are often a core piece. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Understanding the various kinds of trusts that exist can be extremely beneficial to your strategy. If you're retired or nearing retirement age, a trust may help you with a wide range of issues, such as asset protection, tax efficiency, and avoiding probate. Call us today at 800-393-4001 and ask for our new guide called Trusts and Your Financial Plan. We'll discuss a number of different trusts and the areas in which they may help and how to determine which which one may be right for you. Even if you already have a trust in place, this guide can provide a description of certain issues that may arise and could help you decide if changes are needed. Call us today at 800-393-4001 and get your guide today. Or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutsky and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, trivia question today was who became the Weekend Update anchor instead of Al Franken in 1995? They'll be the one and only and late Norm Macdonald. Tom from Winchester, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Tom. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
I want to talk a little bit about this piece from the Financial Times. It's titled, Nvidia Chief Jensen Huang condemns U.S. chip curbs on China as a failure. And I'll quote from it here. Nvidia Chief Jensen Huang has condemned U.S. export controls designed to limit China's access to artificial intelligence chips as a failure that spurred... Thank you, Mark. That spurred Chinese rivals to accelerate development of their own products. In a strongly worded criticism of chip policies pursued by successive U.S. administrations, Chief Executive of the world's leading AI processor maker also criticized Washington's decision to ban an Nvidia product designed specifically for the Chinese market. And basically saying, look, because you wouldn't let the Chinese use our chips, they went out and came up with their own stuff. To which I say, yeah, that was kind of the plan. Like, China obviously was not just going to sit there and be like, well, gee, golly, we can't do anything now. I guess we'll just call it a day and give up. The point is, if you have someone that you view as an adversary with potential national security concerns, you probably don't want to give them some of the most sensitive technology that your country produces. And even if it impacts that company's ability to sell into the country, it still may be in the best interest of your country and the world to force them to come up with their own ways of doing things and not just sell them the technology.
Yeah, their methods may not be proven, so I understand his point, but I don't know if the objective was to ensure that they never evolve their chips. The objective was to make it harder, and it probably did, to get them to divert capital from other areas, which it probably did. So it was an inevitability that they would develop an alternative, but it took time, it took resources. It may not be as good. And hey, at least at the end of the day, we're not, signing our own death warrant, so to speak. I don't mean to be dramatic. We're not at war. Sure. But most experts think we probably will be in the next 10 years. So let's not make that easier for them.
And Huang says, look, I'll quote him again. He says, if the U.S. wants to stay ahead, we need to maximize and accelerate our diffusion, meaning our proliferation of, our AI technology into other parts of the world, not limit it. And I'm just not sure that I buy that when you have a country that has, real national security concerns. I mean, granted, like computer chips on their own, they're not weapons, but clearly we can see how AI could be used for nefarious purposes by, actors with bad intentions. And so I don't think it's much of a stretch to be like, hey, maybe we shouldn't sell this stuff directly into China. It's not crazy to think that.
Hey, on their own, they're not weapons, but neither is the steel that goes into a gun or whatever other metals and material, the plastics
Correct.
on the grip. And I mean, give me a break.
Correct. So I don't know. I don't really have a ton of sympathy for this view of, gee, the U.S. government wouldn't let us, sell stuff into China, and now we've lost our edge. Well, I don't know. Try to maintain your edge then. Like, continue innovating. It's... Again, what do you think the Chinese were going to do? Just give up? I just don't know.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently 2 of their beaches, Trunk Bay in St. John and Megan's Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches towards world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
I want to talk a little bit about this news out of Toyota. They announced their redesigned 2026 RAV4 yesterday. And interesting to me in that it becomes now their second vehicle that they've redesigned in the last 2 years that is going to only be offered in hybrid version. The Toyota Camry now only comes in hybrid versions, and the RAV4, beginning with the upcoming model year, will be the same. They'll have both a conventional hybrid as well as a plug-in hybrid, where you get 50 miles of electric before it kicks over to the conventional hybrid at that point. But this now means that Toyota's 2 best-selling vehicles are going to both be available hybrid only. And this to me is interesting given a few different things. The first is Toyota 4 or 5 years ago, when everyone else was trying to go all EV, they bucked the trend and their stock got punished for it. And now they're being rewarded for not, jumping the gun too far in that direction. But what is interesting to me is that these are their 2 most popular models now. The RAV4 last year sold 434,000 vehicles in the United States. The Camry was 290,000 vehicles in the United States. Between the 2 of them, they make up about half of Toyota's entire sales in the United States, including the Lexus brand as well, which falls under their umbrella. So I do find it notable that pretty much at this point, half of Toyota's sales are going to only be available in hybrid. The Sienna minivan's also there as well right now, but they only sell 66,000 of those a year, so it's not a huge number.
Mike's one of them.
Mike is one of them. The big questions, not even big questions. Look, I think this is where Toyota is going, which is, hey, we've figured out how to make these things pretty darn well and pretty darn cost effectively. There's clearly demand from people who want better gas mileage or something with, partial electrification technology attached to it. And so this is going to be the backbone of our lineup going forward, the vehicles to watch in the future, Highlander, Tacoma. I don't think you'll see it on the Tundra just because from a heavy-duty perspective, you might want to maintain options that are not hybrid only. But again, here's the thing about hybrids and how they're being deployed now. The conventional version that like we're all used to is, hey, I'm a little Prius. I'm driving around on these teeny tiny tires and I got 60 horsepower. Oh boy, hope I can get up this hill. That's what we're used to. What you might not know is that Toyota does already offer hybrid versions of the Tundra, just as an example, except what they use the hybrid engine for is actually to provide more power when needed through the electric drive motor and conventional internal combustion engine operating at the same time. So you can do a couple different things with that. The first is you can get rid of any lag in the gas pedal when you're really, stepping on it. Takes a little while for the RPMs to move up, and obviously, then, you finally get the power. This, you could say, no, when you get, when pressure comes, in X milliseconds and this hard, start the electric motor right away, give me that power right away, and then phase it off as the gas engine comes in, and you get more consistent, more power, coming through that way. So I think you can also look at this as, hey, how can you deploy hybrids in different ways depending on these specific needs? Because what you want from a Tundra driver is going to be different from what you want from a Camry or RAV4 driver. They're going to have different use cases, and so you can build the hybrid system so that it's used differently in those ways. And that's something that I do think you'll continue to see Toyota doing, but I got to tell you, they seem to have really nailed this, and they are, pardon the expression, firing on all cylinders. Your thoughts, Mark?
Or not firing on all cylinders.
Or, occasionally just using those electric motors to get you where you need to go. Any thoughts on this?
No, I don't have any deep insight here.
I'm glad to hear that.
Or shallow.
Let's take a quick break. When we come back, we'll do Stack Roulette.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts in Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, two of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by Margaritaville Resort Cape Cod in Hyannis. Looking for a great vacation spot? Well, look no further than Margaritaville Resort Cape Cod. Located just off Route 6, Margaritaville Resort Cape Cod is perfect for a weekend getaway or fun-filled family vacation. You'll enjoy first-class accommodations and dining, our incredible Fins Up water park, and of course, the gorgeous pageantry of the Cape. Visit MargaritavilleResortsCapeCod.com for reservations and more information.
Mark, what do you got for me for Stack Roulette?
This is from Bloomberg. CVS offers bonuses to staff and pizza parties again to staff.
That's nice of them.
Two stores, staff and stores, that hit certain vaccine targets. So I didn't realize this, but vaccines are a greater driver of, this could be the flu, it could be COVID, greater driver of profit than just about anything else, including, according to this article, pharmacy. So a huge profit center the vaccines represent. And potentially waning demand. There's questions, will the FDA approve COVID vaccine for people under 65 without pre-existing conditions and so forth? Could weigh heavily on CVS's bottom line, at least in the short term. So they're adapting, even in the absence of certainty regarding how the FDA is going to come down on this, adapting by inducing staff to maintain or increase, if that's possible, I guess, vaccine rates. Some of that makes sense. I mean, you're in the store to get your vaccine, you're going to buy other stuff, but vaccines are inherently a big profit center for pharmacies, which I did not know. I always thought of it as a service, sort of like getting your car inspected. You don't think of that as a profit center, which I don't think it is for service stations.
I'm trying to balance all of the conflicting thoughts in my head on this, because on one hand, I look at it and I go, great, you generally want more people getting vaccinated against diseases that can hurt you. It's a good thing. On the other hand, the incentivization of any kind of medical procedure based on profit goals for a specific company, you're kind of looking and you're like, not sure that feels too good to me as a human being. That's kind of bad. Mm-hmm. And then there's, wow, so you're screwing over your pharmacists with light staffing and basically you've prompted a couple different walkouts in the last couple of years, and your idea is to give them a pizza party and instead of maybe staffing up to appropriate levels and things along those lines. That feels kind of gross to me as well, in a very companies not understanding how humans work type of thing. So I get a lot of different thoughts going on.
But in this, there are what a researcher would call externalities associated with getting people vaccinated. My getting vaccinated helps you, helps him.
Sure.
So in this case, I would agree. It could be sleazy, But if it's transparent, and it's semi-transparent here, they don't tell you what their margins are, only that they're higher than on pharmacy and prescriptions. I don't know why those two are different categories, but
I guess here's where I'd go with this. Instead of providing the pizza party to your employees, hey, you got vaccinated? Here's a slice.
Yeah, when I read the headline, I
give
thought
it to the person. Like, give it to the person.
reward
You know,
for-
like I don't know.
Yeah.
Give the person a slice.
And while you're on the way out, get a cholesterol drug.
Yeah, here's your Lipitor too, and
Yeah.
you're good to go. You know, it's a 3-for-1, something like that. Or,
Yeah.
I don't know.
I mean, in theory, the inducement, it is self-evidently good to get vaccine. Well, at least for most people. I know opinions are shifting on that. But you shouldn't need motivation to get a vaccine, right?
Some of us need a little extra slice. You know. It's
Then again, I always get asked about tetanus. And I say, no, I'm not going to go play in a junkyard. Do you get asked for that at your annual physical? Hey, you haven't had a tetanus shot in X number of years.
Yeah, I get them like every 10 years.
You do get your tetanus.
Mhm.
Okay.
Do you know what tetanus does to you?
No, sir. I don't.
It's not
See,
good.
This is a good PSA. What is my future?
So
what, like hair loss and excess weight? Because I'm living that.
No, it's
so does it get much worse?
No,
than
it's
age.
it's typically not good. So basically, once you have symptoms of tetanus, I believe the fatality rate is pretty high.
Oh.
And so, because it's like muscle spasms and stuff like that that get incredibly uncomfortable and prevent you from doing things.
Oh, okay.
It's not just like, hey, here's a fever and call it a day. It's it's.
I wonder why they don't push harder, given that the consequences are so dire.
There's just not much of it.
Yeah. Okay.
Let me pull up. Like, I don't think it happens very often. Yeah. So here we go. So, tetanus occurs in all parts of the world. In 2015, there were around 209,000 infections and 59,000 deaths globally. So again, like the mortality rate is high if you get it. There's just not that much tetanus out there. It's a bacteria. I don't know why it hangs out around rusty nails. I'm not sure of that.
It eats the rust, I guess. Obviously, it's not that it likes it.
Let me see. Here we go. The bacteria is called Clostridium tetani, and it's a common soil bacteria and causative agent of tetanus, usually rod-shaped and up to 2.5 micrometers long. So you can't see them.
That would explain why I'm missing it.
You know, you don't see them just crawling around like little worms and everything.
That would be a concern.
And let's see, blah, blah, blah.
All
Rolling disease. It's frequently benign in the soil or intestinal tracts of animals, but it can occasionally cause the disease tetanus. It typically happens when spores enter the body through a wound.
So if you're doing gardening or something.
So basically this stuff is everywhere, and it's fine if it's in your gut.
All right.
But if it gets into your blood, it's bad.
Okay.
Which I think the other name for tetanus used to be blood poisoning, right? Or is that something else? That might be something else.
Don't give me anything else to worry about today, Chuck. You've already given me a lot to think about.
In any case.
Yeah, that's something else.
All right, I'll get
else? Okay, I thought so. I don't know. That's all I have on tetanus. Is it's not good if you get it. I know that much. Fortnite is back in the App Store for Apple. They restored it. It's been gone for 5 years, by the way, and this kicked off a huge lawsuit between Epic Games and Apple. I'll quote here from the New York Times. Last month, a judge with the U.S. District Court of Northern California ruled Apple cannot reject apps for including links to outside payment methods that enable developers to avoid the App Store's 30% commission. Apple then told the game's developer Epic Games days later that it had a contractual right to reject an app from the store, court documents showed, but Epic said that Apple was circumventing the ruling. On Monday, the judge called on Apple to reinstate Fortnite to the App Store or return to court to prove it had a legal basis for not doing so, and the next day, Fortnite was back on iPhones.
And it is now number one on the top charts.
Not really surprising that this is
very popular game
where
still.
this ended up. Is it still like really big otherwise?
I always see random videos of it. Yeah, maybe not as big as when it first debuted, but still, relevant.
Because that's the thing. I mean, this game came out, I want to say it was 2017, maybe 2018. So you're talking about a game that's almost 10 years old now, and it's got some staying power in a way that only a few games really do. I mean, the ones with good online competition tend to have that. The original Counter-Strike was one of those that stuck around for 8-9 years. trying to think of other ones that are in the ballpark. World of Warcraft has been going for like 20 years now. They just keep throwing more stuff on that pile. So, in any case, let's take a quick break for the entire rest of the day. Dow's off 305 points, S&P's down 6, NASDAQ up 80. So, mixed markets. We'll see what tomorrow brings on the Financial Exchange.